Whether you're looking to explore new markets, assess your client portfolio, or check the robustness of your supply chain, you need complete, global and fresh data to trade with confidence. At Coface, we've been managing data for 80 years. It's our most strategic asset, making us a global leader in trade credit risk management. Today, we benefit from our unique database of 250 million companies, helping 100,000 companies grow in 200 markets. Please enter the Coface Data Factory. When a client asks for a score assessing the default risk of a company, we start from our proprietary data. We complete our core dataset by cross-analyzing multi-source data, partnering with the best information providers around the world, sourcing alternative private and public data. Our data patrimony is fueled by our 60 data centers around the globe, where our 300+ credit analysts on the ground enrich the data, directly contacting companies. We match our information with the country and the sectorial assessment of our economists around the globe. We convert this big data into key valuable insights, generating a unique score to help you make smart decisions. Our scores combine the whole of Coface's expertise. Our risk experts and data lab teams with advanced data science algorithms, machine learning models, and AI, combining the best of both worlds. Coface Business Information Services don't just provide data, we deliver powerful decision-making solutions. Connect to Coface's global ecosystem and upgrade your commercial risk management to the next level.
Welcome at the 5th Country Risk Conference here in the Netherlands, here at our home location in Amsterdam. Welcome to our clients, welcome to our business partners, welcome to other visitors, some colleagues from the region, and our 270, I just saw, visitors via the live stream. Everyone, very welcome. You just heard a couple of lyrics from a song called Tightrope. Tightrope performed by Michelle Williams. And we all know in reality, walking over a tightrope is an extremely dangerous situation to do. But also in economic terms, a tightrope marks a period of difficulty and uncertainty. And the song later on, if you listen to the complete song, it will tell you that you can have two options. You can sit still and hope for the best in such a period, or you can explore. You can stand up, face the uncertainty, look for challenges and opportunities. And that is what we are trying to do this afternoon, to give you a program where in difficult environments you also have the opportunities and the challenges. And we will help you with that. So I'm not going to sum up all the geopolitical disruptions that we are facing these days, and nor the unbalanced political situation in our country and also in some neighboring countries like France, for instance. But we are out still in the Netherlands a little bit in a period of huge inflation, high inflation. And relatively seen, although high inflation might be good for the level, the volume of your debt, in the end, we all know that the cost of finance will increase. And if you have to refinance your business in such a period, the cost will go up even more. but also your suppliers. Also your suppliers will try to swift on the cost to you as a buyer of the purchase cost. The cost will go up in time of inflation, already have gone up and will go up. And on top of that, companies are often faced by increased local costs. For instance, increase of salaries. So on the one hand, you have the increase of cost for many companies. And then we have the revenue side, the top line. And what we saw here in the Netherlands in the last couple of years after the COVID period is that the purchase power of many companies and many individuals was still kept rather stable. And the result is that the turnover, the top lines for many companies were also, I would say, kept alive. But what we have seen at Coface in the last quarters is that the consumer spending and the consumer confidence is going down. So on the one hand side, you have your costs going up. On the other hand side, you have pressure on your top lines. We have geopolitical tensions. And we have an unclear political situation, although we have elections at the end of this month. But okay, we will never know. So for sure, this is an uncertain environment. And I see it as our obligation, and in fact, not only for us as Coface, but also for our business partner, that especially in these times, we should guide our clients, our future clients, to help them, to support them through this difficult period. And I strongly believe we can. We can with our trade credit insurance products, with our business information products, with our worldwide debt collection, and also with our finance solutions like factoring. And this is an obligation and a task that we have to fulfill together to have our clients and our future clients look for opportunities, although they are facing challenges. So let's have a look at our today's agenda. We will start with the Coface Economic Outlook, and then we will have an intermezzo with Q&A, followed by a short break. We also have the listeners in the live stream, and then our keynote speaker, she will explain what is happening, and probably already noticed, surrounded with you with AI. What does it do with your environment? What does it do with you as a person? And what does it do with you in your business? And then we are close to 5 o'clock, and by that time I kindly invite you below to go to the foyer where we could further elaborate, discuss the uncertainty, and especially how we're going to guide our clients through this difficult period. So let's start with our first speaker, Christiane van Berg. Christiane is Head of Economic Research for the Northern European region at Coface. She will give us a complete outlook, economic outlook. She will discuss country views, country risks, sector analysis, and challenges that we are facing for the Netherlands, for the US, and other neighboring countries. Please, Christiane.
Thanks a lot, Arthur. Goeiedag, everyone. Yeah, you're laughing. I practiced that the whole trip because I just came from Haarlem. And speaking of uncertainties, guys, I used 3 different trains today in the Dutch train system. And I am from Germany, as you maybe know. And I know that German train bashing is a sport in Germany, but guys, at least the Deutsche Bahn has the decency to tell you that the train is cancelled. In the Netherlands, you stand at the platform in Breda, the train is there, it just says do not board. Waiting for 15 minutes, and then we were allowed to because the former train was cancelled. This train went, so I am in time here. But I think that already gives you the version of uncertainty. Uncertainty means you are standing actually and can go nowhere. You have no clue. When is the next train coming? Is this the correct train? Do I have to change the platform? And this is exactly where we are right now, if you are seeing this as a metaphor for global uncertainty. And if you want to measure global uncertainty, that's quite hard, because if I ask you, hey, how is your personal level of uncertainty? You would say, high, and if I say 0 to 10, then it depends. If you are standing on a platform waiting to go to the country risk conference in Amsterdam, it's like 11. But we are measuring it a little bit different, and with we, I do not mean COFAS. We are using actually some data from the World Economic Policy Uncertainty Index. You see it here on the right-hand side. And what do they do? They are actually monitoring different kind of newspapers. And in the newspapers, they're reading for words like crisis, like economic uncertainty, like recession, all these trigger words, the R word. No? We have several words that we do not want to use. The R word, recession, we do not want to use for us. And that's what you see here. You see here that we have actually some single different kind of peaks. And what I personally find interesting is that we have, now we cannot see it that much, but you see here some kind of increasing trend. So after one crisis, there comes the next, the former one has not leveled out yet, then there is another one, and so the uncertainty is building up in the global world. The good thing is, for the Netherlands, you are way more resilient than the rest, and we can see it here. It's not like an increasing trend, but always like the heart rate is peaking up. And I tried to measure it a little bit with the different kind of situations. So the first one that we see here at a high peak was 9/11. I think everybody here remembers that. That was quite a hard incident, followed by the bust of the dot-com bubble. Now, these are the times where these trigger words are increasing. And if you are asking, okay, about which kind of newspaper she's talking, I can tell you, and Renske practiced it with me, so Algemeen Dagblad, Handelsblad, De Telegraaf, yeah, okay, Trouw, and De Volkskrant. Thank you. Thank you, I will be here for the rest of the week. No. But these are the kind of newspapers where they are measuring these words, so quite a lot of different kind. It's not that they are focusing on one, but I think they are trying to give you a kind of specter here. And we see it, the dot-com bubble, then the financial market crisis. What I personally found interesting was this peak in 2010. What I found is that this was the dissolution of the Netherlands Antilles. Personally, I have not felt it, but if you have felt the uncertainty, then it's okay. And I find it very interesting that this is the all-time peak right now in this history. Personally, I felt that the European debt crisis was more robust for us, but that's, I guess, a thing of perspective. The Brexit referendum, especially an important thing for the Netherlands, given how much trade there is, especially in agriculture. COVID-19, and then Donald Trump. Second time, Donald Trump. Let's say it that way. First time was around here. So therefore it's included. And you see it's still going up. We have quarterly data. So this one here where I marked it was Q1 2025. This is Q2 2025. And as you maybe remember, in April, I think it was the 4th of April, the new Liberation Day was there. From a European perspective, I found it quite sarcastic to call this day the Liberation Day, but you know Donald Trump, it cannot get lower than superlatives. So this is the situation of economic policy uncertainty. We have quite a lot of it, and now we want to get a little bit into it. I cannot promise you that you have more certainty at the end of this presentation, but I hope that I can give you a little bit more insights into it, what has really happened, because one thing is what the news are telling you, one thing is what the White House is telling you. We have realized that the White House is telling you things we were not aware of in Europe, and then what the data is actually telling us, because this is, I think, the one thing that we can agree here in this room and also digitally, that we are focusing on the data and not what anybody said to anyone else. Let's talk about trade, because that's, I mean, an important thing. we, as COFAS, are not only business information provider, but also, of course, an export credit insurance, and therefore trade is our bread and butter business. And what we see is that, unfortunately, trade is not the business model of countries anymore. If you are looking on the left-hand side, when you see exports of goods and services, you see that for the world, the share of exports to GDP has stabilized. It's not going up anymore, and actually not only since the pandemic or something that already starts in the 2010s. So we had the globalization, but then it came to a stop. It does not mean that trade is coming to a stop. Trade is still growing, don't worry. Economies are still growing, but it's not that trade is taking the main stage. It's slowly put a little bit away to other areas, and services are more in the middle of an economy. And actually, you see quite well that China has quite a lot of impact. You think that China is flooding the market with its products. Yes, that's true, but these products are very cheap. And if you are comparing them to the total GDP that China is doing, the level is decreasing. So neither for China trade is the main focus anymore, nor for the rest of the world. Trade is going a bit to the side, and that's quite a problem, especially if you're looking at the Netherlands, where trade is the business model since the Middle Ages. The question is also, where should we go? I mean, what can we do? If you are in trade, what shall we do? I mean, we were used to the time of globalization, the 2000s, the 2010s. That was the time where the party was really going on. I mean, in 1995, the WTO was founded, so we have common rules. And we now know that nobody will ever ask the WTO anymore for any rules, because who's caring about the WTO if everybody's doing their thing? The COVID pandemic happened. Okay, that was unfortunate, for sure. Then we had this major traffic jams on the ports. I don't know if you remember it. I mean, the ones who are maybe from Rotterdam can remember the traffic jam and in their ports, but this was one of all global big ports in the world. Then the question was, okay, how should we react to it? Okay, maybe we should put some of our supply chains, production chains nearer to us, nearshoring or reshoring. No? Then, after we recovered from that, we had the war in Ukraine starting. And out of the sudden, Russia was not a legitimate partner anymore to make trade. Yeah, great. Russia out of the picture. We still have supply chain issues. What shall we do? So the question was then, okay, maybe we are only doing now trade with friends. The question is, who's your friend? I mean, that depends, I guess, on the definition of it. And you still do trade with China because nobody can get around China, but at least you take China and some kind of plan B. If China is not working out, then you have some kind of plan B, for example, Vietnam. And now the question with the Trump trade war, what are we doing now? I mean, apparently we are not friends with the United States anymore. And to give you a little bit of insights, we will now talk a little bit more about tariffs in the United States. And there are two reasons for these tariffs. I mean, you cannot just say there are tariffs. You need some kind of legal background around that. What is the legal background? Two things. First, if you go against countries overall, then you need some kind of situation of emergency. Funny thing, if you are looking at the law, this can only be announced by the Congress, but Donald Trump does not care what the Congress is saying. And also, you need this emergency, and I do not think, is there emergency in the Netherlands right now with the United States? With Germany, with actually the whole world, with the United States? I would not say that this is the case, but I guess that depends how you see it. The other thing is, if a product has an impact on the defense situation of the United States. So if there is a tariff against a product like aluminum, like steel, like cars, like pharmaceuticals now, it is to prevent that the United States have a military impact due to that. Has anybody an idea which product was targeted as such a product for the very first time in 2018? It was washing machines. Washing machines. And the funny fact was that washing machines from Germany were targeted. I mean, Germany, we have Siemens, we have Bosch, we have Miele washing machines. I don't know if you use them. I can tell you they are marvelous. But I can also tell you from German history experience, a washing machine doesn't help you to win a war. Just saying. So it doesn't make any sense at all. But right now we have to work with exactly that. And why do we have tariffs? It is to reduce the trade balance with the United States. And you see here how this is working out. So what you see is in dark blue the total trade balance, and it worsened quite a lot because there was a front-loading effect. Everybody knew that there would be tariffs coming up, so in the United States they imported as much as they could to build up their stocks to the roof. And now we are back to the pre-situation as you see here. So nothing really has changed. The United States are importing roughly as much goods as before, maybe from different kind of sources, maybe other products, but in total, it has not changed the bigger picture. On the other hand, the United States are having quite high import tariffs, and we have to try to give you some kind of insights. We used the one of September, and we are talking now about all countries, and it's the effective tariff on imports. It's 17%. The last time that the United States had 17% as tariffs on their products was in 1935. I don't think that anybody of us wants to go back to that time. Apparently, the United States want to do that. But as you see, it could have been worse if we have stuck to the very first tariffs that were announced in April, the Liberation Day. It would have been plus the 125% on China, because they were there was this kind of trade war. We would have been at 36%, and unfortunately we do not have the numbers for the 19th century. Otherwise I could have shown you how much the tariffs were there, but at least in the last 125 years this was never reached. But, and that's important, this is what they say. And this is what we see. What they say and what we see are two kind of different things. On the left-hand side, because, I mean, the reason is, take an example. If I tell you I do a diet and I will not eat any kiwis anymore, you will say, oh, she is on a diet. And if I tell you that I haven't eaten a kiwi in years, you will realize nothing has changed. So this is a little bit the situation here. There are high tariffs on some products that are not imported, and therefore we do not see it at customs control. These are the numbers on the left-hand side for the tariff that we actually see on customs control. And if you're looking at the world, then you see that an announced tariff of 17% in the end gets 9.7%. in, I think it was July. And for China, where we had tariffs that depend a bit from 35% to 90%, depends. Temu products, for example, all these really cheap stuff have a 90% tariff rate right now. They are going down to 38%. So Donald Trump and the White House is going around with big words, with big announcements. What we see in the end is way more cooked down. However, and that's important, he has not chickened out. Because that was the thing, no? Taco, Trump is always chickening out. No, that was not the case, at least not what we see. It's not as worse as he said, but we see something. And you see it not only, of course, in this increase, we also made it for different kind of regions and countries. 2017 is the tariff that we had before Donald Trump went into office for the first time. 2024 is the level before Donald Trump went into office the second time. and green is July. And you see, yes, we have an extreme increase of tariffs, even the ones that we actually see. A good thing is, at least if you are looking at the Netherlands, that you are not affected as much. And the big reason is you are not exporting cars. You are not really exporting that much aluminum or steel or copper. What is exported a lot is electronics and mechanical stuff to build semiconductors, to build chips. This is of course excluded. Pharmaceuticals also first excluded, at least in July 2025. Now we have a tariff on it, but 15% for us in the EU. So this is why, if you compare it, for example, with Germany, where we technically have the same tariffs, Germany is affected way more because we're exporting exactly these things that are very expensive now to export. And these are the tariffs. But the main question is, I think, for all of us, who is actually paying for that? And there are three kinds of persons who can pay for it. First, the one who is exporting. Now, if you are a company exporting to the United States and do not want to change anything for your customer, then you will take the whole hit from the tariff, reduce your import prices for the importer, and then you take the complete hit. You see here, the import prices are the blue line, that this is not the case. In total, the world is not taking over too much of the import rates. The second thing is that the producer, the one who is importing it in the United States, is the one who's taking the hit by reducing the margin. That would be the case if the producer prices are increasing. That's actually what you see. And then there is the third person in this, the consumer. The consumer can take the hit. And you see here consumer prices in gray are increasing. All of them are increasing, and this shows that for core goods, and core goods are the ones who do not have specific special tariffs, so not aluminum, not cars also. For that, it is quite good parted between importers, exporters, and the consumer in the end. It depends actually very much on which product. So if you are looking, for example, at beverages, we see that for beverages, if we are talking about your breweries, the breweries here in the Netherlands are taking the complete hit. So for the American beer drinkers, nothing is changing. If we are looking for audio electronics, the United States consumer is paying all of it. And in terms of, I think, aluminum, it's the exporter and also the importer, and the consumer is not paying at all. So it depends really on which product and how much the people can react to it. But in core, we see that all three are having to pay the bill for these tariffs. And it's obviously not only the one who is exporting, which we could have told Donald Trump months ago, but who is listening to experts? Come on. You see here a little bit the question which countries are actually more paying for the tariffs and which are less. I already said if the importers is reducing the import prices, they are taking a bit of the hit of the tariffs. And we see two countries which are mainly doing that. Canada, because I have the feeling they are just too nice. Canada, and interestingly, China also. And for China, I guess it's because of Temu, Shein, and so on. These products have right now a tariff of 90%, so nobody would ever actually buy Temu products in the United States anymore if they almost have to pay the double price. So I guess that these are the products where they are paying for it. You see here in Europe, the increase is moderate, so probably we are paying a bit of it, but not completely. We are not reducing our import prices as much, and the United Kingdom, they have the guts to say, do whatever you want, we are not paying anything. So this is the situation here, and the question is, what is the impact of all of that on our country risks? Because, I mean, this presentation is mainly about country and sector risk, and the question is, how does this uncertainty play into our country risk map? COFAS is assessing a total of 160 countries in the country risk map, with a risk that depends from A to E. E, extreme high risk. E means we are actually not doing anything in this country. Mainly, E is reserved for countries with a very big, unforeseeable military conflict. You see that, for example, Russia is still in D. E is really for the countries where you have no clue what's going on, and for countries that are on a sanction list. All others are in this spectre, and as you see, A is a wild field, so therefore we make a cut between them to show you also the differences in Europe, or to show you the differences between, for example, the Netherlands, Belgium, France, and Germany, and to make that more clearer. And the question first is, what goes into the country risk? Because, I mean, everybody can say A3. This is unfortunately not how my job is. That would be quite nice, but that's not what I'm paid for. We are including how much is the economy developed. No, I think that's quite clear. The Netherlands, very high developed country, not a question. The question is then, okay, how's the political risk? And the political risk, yes, I see your faces and I see, okay, what a question right now. It's not how many times you have to elect until you get actually a government. I mean, you can practice as much as you want. Don't worry. It gets then a problem if we have like a coup d'etat. And I don't know, I have the streets here in Amsterdam still look quite quiet. So right now I do not see big riots. I also do not see that that we have, that the government has to step down because they cannot work at all anymore. It's still quiet here, so we can agree political risk is not a problem. We have bureaucracy. Sounds very strange. We say differently governance. Governance sounds nicer than bureaucracy. But in the end, it says the same. The good thing is, you think that bureaucracy is always negative. It does not have to be negative. The good thing is we have common rules. We can adjust to the rules. We have the rules, and if they are broken, we can go to a judge and say, hey, can you please sort that out? And in the Netherlands, they're actually adapting to the law. You think that would be normal. In the United States, apparently that's not the case. Just saying. But so we can say that common rules are quite positive. Then we have fiscal sustainability. There, it gets interesting, especially if we are looking at France. But this is a question, how much room for maneuver do you have if you have not so good economic development? Can you support your economy? This is still the case in the Netherlands. And then last but not least climate change. Well, as you know, 1/3 of the Netherlands would be right now underwater, I think. But the good thing is you have dams. You have dams for centuries now. So it's not a thing that the Netherlands will go underwater for the next years. So we are quite happy with the Netherlands, and that's the structural country risk assessment. In addition comes the economic development. That's where we go in, but I can tell you already, the Netherlands are at A2. Yes, I know, you would love to have A1, but it's not that everybody can have A1. A1 is really reserved to very, very few countries. Right now it's Norway, Switzerland, Luxembourg. I think you see where this is going, no? Build up some more rich people. You need more rich people, I think, then we are there. No, but the Netherlands are in A2, and I can tell you from the history, the Netherlands are a country which is between A1, A2, A3. It doesn't get below, and A3 is really a long way ago. I think very short in 2013 it was the case. So very good situation. We will jump into that in a moment. We have seen that, for example, Germany is in A3, which is obviously not a good situation, especially as it is a main trading partner. France as well in A3, Belgium at A2. So that's good, but we see, if we are looking at economic growth on the right-hand side, that this dynamic, this stronger dynamic of the pre-pandemic times, that's over. And if we are true to ourselves, already 2019 was not a good year. We just forgot it because it was obviously when the pandemic started, nobody cared anymore about 2019. But this is a situation that we have seen that China is not the engine of growth for the world anymore. The Eurozone is not working out mainly because, and I do not want to be so self-focused, but that's the case. Germany is not evolving properly, the German industry, and the German industry is the one who is getting quite a lot of movement into other countries as well. So this is the situation. The United States depends a bit, is always a little bit on the brink, but therefore, we are going right now down to a growth of 2.5% for the whole world economy and 2.4% for the next year. And here you see the single differences. So we see that, for example, we do not expect that much growth anymore for China. India is stepping down. Brazil, even Spain. We will talk about Spain in a minute. The only good thing is that Germany seems to get some kind of small recovery. Do not overestimate this 1.2, please, for next year. The Netherlands, quite stable with 1.5 and 1.2. Okay, where is all of this coming from, these forecasts, these different kind of pictures? And also, where is the A2 for the Netherlands coming? I think that's quite good to see on the left-hand side. And also on the right-hand side. But first, let's go to the left-hand side. That's the GDP development. GDP without inflation, and all are starting at the beginning of the pandemic. Because originally I made this chart just to see how fast are we out of the woods. And then I thought, okay, it's still interesting, so I keep it. And then I thought, what's going on in the Netherlands? I mean, you see it here, Netherlands, not orange, I have to say, it's green. Maybe I should have changed that. But Netherlands here in green, really shooting out of this pandemic like a phoenix out of the ash, really going over the top of the United States of America. And then, unfortunately, you lost the drive. But the good thing is that you were already in such a good start that the level, total level of the economy is still quite high compared to others. Right now, only overtaken from Spain. Spain, like the underdog, getting from below up here. And I can tell you some short stories behind that. So first, what's about the Netherlands? This industrial production line should give you some kind of hint, and we will go later on in the sector who's the main driver of that. But you see here we have some quite strong rebound compared to others. By the way, yesterday the German manufacturing numbers came out and we made kind of a jump here. So yeah, exactly my reaction, like it was like, okay, finally a stabilization, and then not. Yeah, automotive, I just say automotive. But again, we're coming back to that. So the Netherlands, like the best student in the class, if we are looking at the rebound. Then we have the slow progressor named Spain, and the reason is vacation. And I mean, there is a saying in my family, on every proper good place in the world, you have to find one Dutch person. Because I have the feeling that 5 million people in the summer are the base crew, and the other 10 million people are spreading over the world. And wherever you are, you need one person who speaks Dutch. And thankfully, I just came back from the United States in West Yellowstone. I found them. So I really love that you are so open, that the Dutch people are open, are going out to the world and having fun, apparently not only in West Yellowstone, but also in Spain. Because that's what we see. Spain is profiting from tourism really a lot. And it has not changed. Right after the pandemic, it took a time because first they really need to get back to that everybody can go out without masks, etc., or restrictions down. But then we all went partying. Okay, not me, but you. And at the rest of Germany, I mean, Mallorca is, as we all know, the 17th state of Germany. And if we are looking to Tenerife and all the other countries, the Canaries, the Balears, yeah, we all know where this is coming from. And this is what we see here. So due to our support of the Spanish economy, they are out of the woods. Unfortunately, not every economy is built up on tourism. As you see, a country which is definitely not built up on tourism is Germany, which is here in orange. And as you see, Germany is really struggling to at all keep it, to keep it up, to be at the 100 level, which is where we started before the pandemic. And the main reason is something that you can see here. We are in a deep recession of the industrial sector, and this is just balanced out with a strong service sector. And to give you some insights, in Germany, the industry, manufacturing sector, is 20% of the GDP, to be exact, gross value added. So 20% of the economy is the industry. If the industry is not doing well, then the economy cannot really grow. The only thing that can balance it a bit out is the service sector, 70%. For the Netherlands, you would think, oh, this doesn't look good, but still the economy is doing okay-ish. And the reason is, for the Netherlands, the manufacturing sector is 10%, so way less, and therefore the industry is not taking the Dutch economy that much down compared to Germany and also, by the way, France and Italy. Let's jump back to the Netherlands. I said it, we had some great times, then some not great times. Right now it's stabilizing a bit. What are the factors behind it? We see here some investments. Investments are in this middle blue. We have very dark blue, that's private consumption. Private consumption is okay-ish for European country right now. We see way worse in others. Government spending, we see that you spend money. We also see that the deficit is increasing because of that, but from an economic growth perspective, that's quite good. We see that exports have come down quite a lot in Q2, but that's mainly because of the effect from the quarter before. So first, ship everything over to the United States, what's possible, and then obviously you are on hold. And if you see this light blue thing, that's stock building. So obviously, at the beginning, you ship everything over that's possible, means that your stocks are going down, and the next quarter you're filling up the stocks again. So this is what is happening. But the question is, how will it evolve, for example, for Q3 right now? And this is where I think, okay, let's start with consumption. Arthur, you already said that consumer confidence is very negative. Well, that's completely true. Two-digit negative. The question is, when is it positive? So I can tell you, I covered Finland for quite a time. And in Finland, people are never positive, never. It could be the greatest time in the world, and they would say, So luckily, that's not the case for the Netherlands, and luckily, there are more people like me here who are doing online shopping for the Netherlands. Okay, I don't do online shopping for the Netherlands, more for my wardrobe, but we see that this is something where we see some dynamic. So this is in total retail sales, excluding cars, because I think cars are always, I mean, come on, how many times do you buy a car? So if you take it away, then you see quite a stable growth. So it's more a line than a growth. Where you see some increase is right now people are again buying a bit more clothes, like me. They are buying a bit more online, and that's quite a lot. So yes, that's also me. Unfortunately, what they do not do is bigger things. So if we are looking on our home, the next couch, no, I think the old one is still good. New kitchen, come on, this is still good. So we have enough money to say, okay, smaller things are okay. I mean, shoes, books in my case, but bigger things, we are very much reluctant, not only you, also me. And for food, we say, okay, guys, have you seen the prices in the supermarkets? I always get, I live quite a lot of time right at the border to the Netherlands, and in our supermarkets, they speak Dutch. And for a reason, because German supermarket prices are way more lower than the Dutch ones. So we see here a development, and obviously it comes from the prices, and I want to give some data for the things that Arthur already said, like what is going on. Is the inflation rate really that high in the Netherlands compared to the rest? I have a good and a bad news. The good news is that the Dutch inflation is not as strong as the one of Lithuania. Yeah. Or the Czech Republic. Yeah. But then I do not know who has a lower rate, higher rate. So that's already the only thing that I can say. Here you see the 2% target that we want to reach, and the red line is the Dutch inflation rate. You see that the Dutch inflation rate is kind of a drama queen. It always goes very up and very down. And the reason behind that is the price development and the price negotiation here in the Netherlands. You are way more negating. You are not waiting till everything comes down, but say, come on, we want to do business. And you see it, for example, when due to the war in Ukraine, the gas prices went up, all the contracts changed quite fast. While in Germany, everybody was saying, oh yeah, it's still okay. I saw that the bills in the Netherlands went up and up and up and up. But on the other side, they are adapted quite fast also to the low when the energy prices calm down a lot. And that's what you see in the overshooting up and in the overshooting down. But now they have stabilized on a higher level. And for me, it was the question, why? What's going on? So I went into the different kind of subgroups. What is making out the inflation rate in the Netherlands? And you see it on the right-hand side. And I think there's some obvious thing. Rents are adapted to the higher price level, which is between us a fair thing, I think. So, people who have to pay back a credit, who are living maybe from the rent that they get, they have to adapt the rents. The question is how far, how fast, but in general, it's total normal business. In other European countries, this is a more, we give out a contract for rent, and then it's very typical that it will not change over years. So it would be good to start quite on a higher level, because then you will stay with this rent for quite a long time. Not in the Netherlands. The rents are adapted, and the rents are adapted quite a lot. I don't know if you have felt it already, but we see it here in the inflation rate, and this is a reason why we have this difference between the other European countries and the Netherlands. So, inflation is higher than the rest. Still, people are buying. Good thing. The other things where we are looking at, when we're looking at the GDP consumption, we are looking about investments, we are looking about construction, we are looking about exports. A good thing is that the interest rates have calmed down quite a lot. We are right now for the ECB at 2% for the deposit rate. You see that 2% is definitely higher than what we were used to, but in theory, this is the neutral level. Neutral level means it is not pushing further the GDP, but it's also not restraining the economy. So technically, ECB is right now quite neutral, and this should obviously help investment decisions if it is the one of a company or if it is the one of a private investor, for example, for construction. That should be helpful, but to be honest, in the Netherlands, construction is not that a big problem if we are looking at total construction. Why? Because the construction in the civil engineering part has never been a problem. I mean, you are building your infrastructure compared to Germany. And the other thing is that the density of people living in the Netherlands is the highest per square kilometer than anywhere else on the continent. I say continent because I saw that in Malta it should be higher, but I doubt it. Maybe with the tourists. But if you are looking just at the Netherlands, you really need the room for the people. And this is why we see that construction went on. But if you are looking at construction permits, and these permits are mainly for private houses, they have went down noticeably, but recovered since the interest rates came back to a more normal level. What we expect from the ECB, it could be another rate cut in December, maybe one next year. It all depends on the inflation, if inflation is not shooting up, and also how the economy is developing. For example, if the German recovery is not really getting into place, is not evolving, then there could be more rate cuts to support the economy in Europe. What is the look for different kind of sectors? And this is where we are coming back to the strong development of the Dutch manufacturing sector. You see here kind of different sectors, and two are sticking out. Please have a stronger look at the red one, electronic equipments, for example, to build semiconductors. And the second one is the green one, automotive. I put both of them on a different scale on the right-hand side, just to show them a bit better. If I would put them on the other scale, you would see that the red line would be shooting up extremely, and the other one would be going down extremely. So yes, we have quite a strong situation because we had the strong lack of semiconductors, and then you need everything that you can take on the market to build semiconductors. This is why the red one was quite strong. The other one is the automotive sector, mostly delivering to Germany. And this one is, a bit on a free fall. But other sectors like chemicals are not really doing better, I have to say. So, yes, I know it's a bummer, but let's try to focus a little bit on exports. There you see what is the export business, and that's something what we see almost everywhere. The United States with kind of strong increase for front loading all the imports from all over the world, but then coming back to a bit more normal level, but not in general. I mean, if we're looking in general, total exports to the Netherlands, to the US from the Netherlands are still quite high. By the way, I'm writing America because it's Canada and the United States together. Unfortunately, we do not have a total United States, but we can be sure that they are the driving force here. A few words on sectors. COFAS is actually 3 times a year adapting sector risks for 13 different kind of sectors. You see them here. ICT stands for Information Communication Technology. We give them 4 different kind of grades, from low risk to very high risk. And we do that for 28 countries in the world, the Netherlands under them, obviously. And here you see the view on the Netherlands. Unfortunately, quite a lot of rosa, which means high risk. Very high risk is there for automotive and chemical, and I do not think that I have to explain that further because you already saw the data behind it. The ones who are still quite good are pharmaceuticals, and we hope that this will remain even with 50% tariffs to the United States, energy, and obviously ICT, which is the one who made the shoot upwards. But there is a difference between general products and single products. And I thought, I do not just give these numbers to you and then say, just accept the risk, but I thought I give you also some insights. By the way, this table and these charts, I'm pretty sure we can forward them to you so that you do not have to make an image in your head about that. So what you see here on the left-hand side, you have first insolvencies. We have the numbers from January to September, and we compare them to the one of last year. We have activity production and the turnover. The difference between the two of them is obviously the price. And we have leading indicators. And I have here in this chart, or in this table, actually a good message for you. The good message is that a lot is white, and white means stabilizing. Because what you cannot see here is where is the level. You only see the difference. You only see the development. Grain development is positive, or mint development, and a pink kind of version is a negative development. The good thing is we turned from a more pink table to a more white table. Yes, that's a good thing in colors. We actually see some who are unfortunately still on the downward level. I just say chemicals. No? And by the way, white is for me everything between plus and minus 3%, because I mean that's really somewhere in the middle. But if you are above 3%, that's growth. And below, that's really a decrease. And then you have some where we see, oh, there is some positive development here. We may look at that and could go at some point into a more positive assessment of the sector, like here or in the agri-food area. But obviously, it's not always that every data is showing in one direction. That's data. It's not as simple as it looks. Last but not least, I want to give you a view on insolvencies, because I think that was quite short right now. And to give you more insights, these are the insolvencies in the Netherlands of the last years. And the good message here is that the numbers calmed down. They calmed down on a level that is a bit higher than the one of 2019, but they calmed down. Believe me, that's not the case everywhere in Europe. That's quite unique. So, well done. But obviously, that's not the case for everyone. No? In general, you did well, but now let's get into your single companies, and then you see, oh, there are actually some sectors who are doing better than others. Some who are doing right now better, but also because it's the comparison to last year, is pharma, automotive, textile. And you will remember, automotive, textile are not seen well in our comparison. We come to that in a minute. And chemicals, energy, they seem to be really worse because they have some strong increase, really strong increase. Please remember, these are percentage changes. If we go to the total number, this looks different. No? Then a decrease from 100% is just a difference between 0 and 1. So please calm down in the positive or in the negative area. There are some sectors where the percentage change looks really huge, but that's because it's a small sector. In general, we see stabilization of insolvencies, but again, especially in the manufacturing sector area, there are some sectors, agri-food, for example, wood, where you should have a closer look at. And that's all of it right now for the Netherlands. Thank you.
If there's anybody who has some questions,
Oh, yeah. True.
we have a couple of minutes.
I thought I could just vanish.
You can, yes, of course. You still can. But if there's somebody who has a question to Christiane, yeah.
Thank you.
What do you expect what the country risk will become of America?
The country risk of the United States will become. The problem is if you are looking at our different kind of factors, it would change quite fast if we have a big structural change. The structural change we do not see right now. I mean, political uncertainty, yes, but it's not that there is so much protest against what we see. And just to be sure, we at COFAS, we are not judging a political direction. No? That's clear. We are covering 160 countries from our side, in total 200 countries from the business side. We are not judging who you are voting for. For us, it's important that trade is happening. Obviously, that's not the case so much with the United States right now, when we are looking at how easy is it to make trade, but we see trade is going on. And therefore, we need some more impact. If, for example, the GDP development would go down noticeably, for example, because the US citizens are now faced with the costs of the tariffs, then we would see a downgrade to A3 right now. But until then, we do not see that much. Problem is that on this way, people are actually losing some of their grades. For example, I could imagine that a country like Canada, who is in general quite stable but very dependent on the United States, and who is doing actually a boycott. I mean, they are not that much importing the products anymore, and they also do not go on vacation that much anymore to Seattle. I know that personally because I thought, ooh, I have space. So that's what we see, and that's actually a country who is in danger of losing a grade on the country risks. So yes, there is an impact, but it needs a bit more time. You do not see that right away. Also, I mean, what's important is our model is quite big, and yes, we try to change it fast when we see a long-term risk, but what we really want to avoid is like doing upgrade, downgrade, update, upgrade, downgrade. This is not how we are processing. If we are downgrading a country, that's for some time, unfortunately. Any other question? Otherwise, I can tell you that the United States are a great country to do vacation. It's not that I want to do a bashing of the United States, it's just that it's not as easy right now and it's giving us a lot of work. Thank you.
Christiane, thank you for all your inputs and figures, but what is your main conclusion about the Netherlands? We are doing quite well, we should stop complaining.
I am German, I'm not in the position to tell you to stop complaining. Actually, what I always find marvelous in the Dutch is how resilient Dutch people are, and that if they have money, they are spending it on goods, on partying. Sorry to say, it's not negative. On the contrary, you see that, for example, Germany, Austria, these countries, they are always like extremely cautious. And if there are good times, we are saving for the bad times. And in the bad times, we do not recognize that there are bad times. We are still saving. So what we see in the last years is that technically our wealth is going up, but we are not spending it. The Dutch are spending it, and that's what we see in the economy. And therefore, it is way more better. I would wish we have a more stable government next time, or just a government that remains a government and is actually doing some work. That would be personally very favorable. If I have a wish, I would not support somebody with an interesting haircut, but that's very personal. That's my personal. That's really my personal view. But in general, if I look at the Dutch economy, I am way more hopeful than for the German economy, unfortunately. I know that my boss would like me to say something probably different for the German economy, but we see that the Netherlands have a good business model. I mean, trade is not over. It sounded a bit like trade is over. No, that's not the case. Trade will always find its way. And services are really the one where the future is right now in Europe. You're strong in services, you're strong in legal advice, in consulting, so there are so many things to say, you are really good. So I would concentrate on these things, maybe invest into a new kitchen or a new sofa that would support the Dutch economy. By the way, also great reason to sell that to a partner. But in general, don't be too pessimistic. And if I could wish BMW, Mercedes-Benz, VW, whatever. I mean, you can come to us, drive 150 on the Autobahn, then go back to go to 100 again. No problem. Actually, you are already on the German Autobahn, let's be honest, come on. So use it and buy German cars, yes.
Thank you. Thank you, Christiane. Thank you, Christiane. I think we all got a clear view over the next hour on on our economy, not only on our Dutch economy, but more on the macroeconomic side as well. And I have this strange habit to kind of remember things that I find interesting myself. So can I grow the economy as well when I just, increase my spend on Dutch retail goods?
Obviously,
yes.
It would be a very patriotic thing of you to do.
Yes.
So please go forward with that.
Okay. That will be my main focus, and I'm pretty sure that there are other mothers in the audience that can do that support to the economy as well.
And to your country.
Oh, and to the country as well, definitely. But we have a clear view, I believe, on not only the threats, not only the challenges, but also on the opportunities that lay ahead of us for the upcoming times. And well, actually, maybe it's good that I introduce myself for a minute because I don't know if anybody... My name is Renske Witloks. I'm the head of marketing communications for Coface Netherlands. And that gives me the honor to organize this country risk event on a yearly basis, but also gives me the honor to think about, okay, what topics do we want to touch? Of course, the economy. Of course, some things that are really hot topics like we have later this afternoon, like AI. But there's also something else that I want to address today that we have to cover, I would say. Because many of you here in the audience, I would say, if you're a relation, a client, maybe a broker, you have been working with us for years. And I challenge you that if I ask you, what is Coface? That most of you would say, very confident, we are accredited. Coface is a credit insurer. And yes, that's true. But now, today, it's 2025. And I would say that's only partly true. So I would like to challenge you to give me just 10 minutes to challenge that view just a little bit, to broaden that vision, because Coface is not only a credit insurer anymore. We are a data-driven business partner that delivers real-time data insights through your entire supply chain. And on that topic, we are constantly innovating and evolving in different ways. And maybe I'm not the right person to tell you that, but I think I'm the right person to ask some interesting questions. Okay. So I'm joined on the stage today by somebody who embodies this transformation, at least for Coface Netherlands. Eelco Ouwerkerk, our Chief Commercial Officer.
Oh, thank you very much, Renske, and also thank you very much for your kind words, which I immediately translate and transfer to my colleagues. Embodying the change. This is a very nice topic that you address. I think that indeed if you would ask many of us, how do you see Coface, how do you perceive Coface, a traditional credit insurer? There's nothing wrong with that. It's not good, it's not bad, but we wanted more. So we infused some passion, some energy, some power, but most of all, data. And then you would ask us, or this question is asked quite often to us, why? Quite simply, our clients not only asked it, they demanded it. Not only our clients, but also our brokers, our partners. So that's what we did. And then the second question we asked ourselves, and that was perhaps the most difficult question, how? We made sure that the data we use, the insights we use, not only for ourselves, not only for our clients, but most of all for our partners, should be predictable, should be reliable, but most of all, and that is a word that I use quite often in our company, it should be actionable. Everything that we do in our daily job should have an action attached to that. So Renske, if you would ask me, are we more than a credit insurer? I would say yes. And I would say we change from being reactive to literally being a proactive insurer, a proactive partner, not only protecting business, but also managing their risk proactively.
And is there something like a corporate strategy driving this change?
Yes, and I'm
Yeah,
happy.
because
So you saw me wondering, eh? You saw me wondering.
Because of course there is you're telling about how, but there should be something like a structure, and it's maybe good to tell a bit about that structure.
Yeah. Then I come to two other favorite words of me that I use quite often in daily life. One is strategy, and one is execution. And Renske smiles because these are my words that I use quite often. Our strategy is called Power the Core. And that's a strategy we initiated in 2024, and that runs until 2027. And there are, in fact, 3 pillars, so you could say, in that strategy. Technology, partnerships, and partnerships we most often translate to offering our Partner Connect model, and people. And the underlying foundation that we use on a daily basis is data. Data is key in everything that we do. We provide data to our clients, we use it to make our own proposition better, but most of all it is made or it is done because our actions and our consequences are measured on that. Yeah. So Renske, that is key in our journey, I would say.
Yes, and like on a practical basis, like for clients, maybe for brokers or other relations that use that data on a daily basis, what can they see? What change do they see? Like in systems or...
Yeah, so we, from a, and now I'm talking about a commercial side, interacting with the many clients that we have. Many of them are being brought to us via our broker relations. And we are very happy with that because that is key in our commercial journey. And a few months ago, a client asked us, and it was luckily that we won this RFP, so that's why I use this example. It was a lady and she asked us, it's a very nice story, Eelco, I understand, I know where you're heading to, I know what Coface does, but how do I see that? What is changing for me? And then we explained our concept of business information. Not only business information in the sense that, hey, you should use business information, but more the tooling that we have, our Urba platform, etc. And then when we had the discussion, she said, and this is a quote that resonates with me really well, so it's not about managing my invoices, it's about managing the entire ecosystem of risk. And I thought about that quote and I thought, yes, what we do on a daily basis is managing the entire ecosystem of risk.
Yeah, but that ecosystem of risk where you're talking about, that's a global ecosystem. And we both know, and we all know it here, you know that ecosystem is global, and that quality of that data that come from other regions, that can vary widely. And how are we strengthening our positions to make sure that the data quality over all regions is improving and it's getting like through a good baseline?
Yeah, so that's a difficult question, because how do you measure that across multiple countries that we have and multiple colleagues? But
and also cultures, I would say.
Yes, but it is key in the evolution in everything that we do. And in the beginning of 25, we as Coface acquired in my opinion, beautiful company. It's called Cedar Rose. Some of its representatives are here in the audience as well. And they have found a true, I would say, niche or a sweet spot, being able to present and to predict data out of sectors, out of countries, out of continents, most notably Africa and the Middle East, where data is scarce, where data is limited, where data is not readily available. And by fueling their data in our global data system, we as Coface say that we are not only a global player, but we also act local. And that is, I think, the strength in that.
Because that brings us to somebody I would really like to introduce you to, somebody who's now part of the Coface family as well, and who knows about this region more than who else. It's Paul Kosters from Cedar Rose. And Paul, I have a mic here for you.
Thank
Yes.
you. Thank you very much.
And it would be great if you could introduce yourself just a little bit and tell about Cedar Rose and what does Cedar Rose bring to Coface?
Yeah, of course. So my name is Paul Kosters. I'm leading the commercial function at Cedar Rose. As you've heard from Elko, we have recently joined the Coface family, just a couple of months ago, actually. I myself have been in the business information industry for about a good over 25 years. Some of the people in the audience have been with me for such a long time as well. It is quite interesting actually to see when I look back at that career that back in the days business information was predominantly about creating data repositories and basically to allow other people to use that information to take decisions. Today things have changed a lot, as you have seen it in your daily life. Luckily through technology and insights that are being generated. From the point of view of Cedar Rose and really the way that Cedar Rose is adding value to Coface is really basically looking at the challenges related to the data and really being able to say, well, okay, fine. Now we bring to Coface the 25 or the 27 years of experience that we have in terms of cracking the code of having access to the good and the right business information related to the Middle East and Africa, which is not an easy thing for some of you that are doing business in that part of the world. You know how difficult it can be and how fragmented the data is. I talk about a region, but it's made of tens of different countries, different jurisdictions.
Yeah, and what does that mean in like daily business for our clients? Is the data integrated in all the systems? Could you maybe elaborate a bit on that?
So what we see is that it really allows basically our customers to focus on their business and to own their risk management as well. So as I was saying in the beginning, in the past there was a requirement to basically really understand the data sources, the quality of the data before you could actually start doing your work, analyzing and taking your decisions. Today, luckily, you've got people like us, like Coface, that is providing a global solution that is capable of doing that for you. And it basically is very important, especially today, that risks are converging. It's not only just looking at credit risk or financial risk individually. There are many different aspects basically affecting businesses. It could be cyber, it could be compliance, it could be all sorts of different aspects. Yeah. Tools like Urba and other platforms are basically helping, meeting these kind of challenges, and we're there to basically play our role for the region of interest.
Yeah, and that brings me to questions a bit more, maybe offside of the integration, but more something interesting, like on a daily basis when trading with the Middle Eastern companies. What are the main challenges that Dutch businesses are facing then?
So what we see is that often it would be more SMEs that are basically struggling with managing the relationships in the Middle East and Africa. Often we realize that SMEs would not take enough time to basically check or verify the business partners that they're going to be engaging with. Agreeing on payment terms is often a challenge, and having the required agreements in place in order to be able to operate properly. If you look at the UAE, which is one of the three big economies that are attracting a lot of interest, the second one being Saudi Arabia. Yeah. But the UAE, for instance, currently, on average, we're at 55 days delay beyond payment terms.
Yeah, payment,
close to 60% of invoices are being paid late. Yeah. And it is a place that is attracting a lot of interest for many different reasons. Trade is definitely one of them. So I think that is definitely important. The other thing that we see is the element of what I would call due diligence, is the fact that, and I've got a very clear example in mind, an agri-food company from the Netherlands that is struggling to basically deliver its products to the supermarket chains in this case, because they did not do the right due diligence on their subcontractors. So the last mile is totally mismanaged, which is a big problem for them. But they should have basically gotten further into the due diligence that is required. And obviously coming with a different mindset, because the business culture is very different.
Yeah.
So these are the kind of things that we see and the kind of problems that we solve.
Yeah.
But it keeps us busy.
Well, thank you. I think it's an interesting story, and I really invite you all. If you want to know more, if you want to have a chat with Paul, have a chat with your account manager at Coface, so we can connect as well. Because I can imagine that for some of you here, this is a key area for your trade as well. But for now, I want to. Yeah, is it really funny? Do you face these challenges on a daily basis as well? I saw you had to laugh really hard. So, do you face these challenges as well?
Every day.
Yes. Yes. Yeah, but I can imagine. So we are really trying to extend with the acquisition of Cedar Rose this area. And thank you very much. Thank you, Eelco. Thank you, Paul. So let me leave you with this question, and what is the data that you use every day for your business? Is it giving you the full picture that you need? And I don't mean only on the credit side. I mean, is it help you to make all your decisions with confidence? And I would say to everybody in this audience, and also thanks to this gentleman here, we are here to help you go beyond insurance, to unlock the power of data, because Coface today is way more than a credit insurer. We are your partner in navigating risk, building resilience, and partnering growth. And now I would like to invite you to go to the reception area for a short break. And we continue at 3:45 sharp because of the live stream as well. Have a drink, and we will see each other in 15 minutes.